At 700 we bid, can I see 10? Thank you.
7 I've got, another 20.
If you're going to have a crack at it, now's the time.
As property prices continue to surge ahead,
985. How about 990?
saving up for a deposit on a house is getting harder by the week.
We are going. We are.
Sold. Congratulations.
It's not easy, so most of the banks say they want a 20% deposit.
Julia Steenkamp's been putting money away for her dream home on Melbourne's outskirts for years.
Some space to keep a horse, and just a little cottage. Yeah, it wouldn't have to be anything fancy.
But because she's still nowhere near the $100,000+ she'll need for a 20% deposit, her bank will force her to pay for lender's mortgage insurance, which could cost up to $40,000 on top of the loan.
When you apply for a loan, they just say you have to get lender's mortgage insurance. The way that they phrase it to the borrower is it allows you to borrow more. So it's in your best interest.
And so what's your understanding of how lender's mortgage insurance works? I mean, who's protected?
The bank. So it's the most bizarre system.
Have you heard of any other types of insurance where you pay to insure somebody else?
No, I've actually never come across it. This is one of the early issues that we had. They call it lender's mortgage insurance, and it does do that. It insures the lender's mortgage, but the borrower pays for it, and they pay through the note.
In the first 6 months of this year, Australians spent more than $500 million on lender's mortgage insurance and took out almost 100,000 policies.
And you can get your desired property without having to wait and save the full 20% deposit. So, in a sense,
Most of the big banks, insurers and mortgage brokers' websites have pages explaining how lender's mortgage insurance works. But it's not always clear exactly what can happen if you default.
If something horrible happens and that the house has to be sold under a mortgage in possession, the house gets sold, the lender makes a loss potentially if that happens. The lender then claims against insurance policy, the insurer pays the bank, so the bank gets out scot-free. But what that loss was, they then chase the borrower to recoup. That could be $100,000.
That's exactly what happened to Helen Tolan.
Yeah, we found out when we got a letter from a lawyer telling us that we had to pay this money. Before that, we didn't know.
Helen and her husband Joe are still living with the financial pain of a failed investment in a Cairns apartment 6 years ago. The Perth couple's investment was going well until Cyclone Yasi tore through Cairns in January 2011 and made it almost impossible to find a tenant.
The rent went right down and the price of the house went right down, and then we ended up losing it.
The bank repossessed the apartment, but the sale of the property didn't cover the loan. So the bank's lender's mortgage insurance provider, QBE, chased the Tolans for the difference.
This is 48 hours and you can pay $87,000 in 48 hours.
And when they couldn't pay, QBE tried to push them into bankruptcy.
QBE's behaviour, I think, was terrible. They treated us disgusting. It was like they wanted their money and they didn't care how they got their money.
The Tolans would have lost their home if they went bankrupt, so they reached an agreement with QBE to repay $87,000 over 5 years.
We pay $450 a week back for QBE, and then we have our mortgage on top of that. We get left with nothing.
I lost my credit cards, I lost my credit rating. I wasn't able to go overseas because they took my passport. I needed permission.
Dorrit Lambden's life has changed completely since she went into bankruptcy after QBE pursued her over a lender's mortgage insurance policy. When she fell behind on her repayments during the global financial crisis, her bank repossessed her house in Sydney and resold it at a loss.
I was totally in the dark. There was nobody out there to tell me what my rights were and whether I had any rights at all. So all they told me was that you're not insured, the bank is insured. And that was all.
QBE and its main rival, Genworth Financial, have tried to bankrupt dozens of people over the past decade, and in many cases they've been successful. Neither company would do an interview with 730, but they say cases like the Tollens and Dorrit Lambden are rare because house prices are rising so steadily, they say. When houses are repossessed and sold, there's generally no shortfall. But that won't necessarily be the case forever.
Once property prices begin to slip, then more people get into difficulty. They try and sell, they can't sell, then they actually default. And at the point of default is at the point, of course, when the LMI would be triggered.
Australia's mortgage broker lobby isn't waiting to see whether more home buyers find themselves in trouble. It wants the government to step in and force lenders to supply all new home buyers with a clear explanation of how lenders' mortgage insurance works.
They do disclose it, but it's just buried in the terms and conditions. Make it a regulated document that every banker and every broker must give to the client, and the client needs to understand.
Dorrit Lambden's bankruptcy has given her time to ponder what went wrong with her mortgage. Now she wants the finance industry to change the way lenders' mortgage insurance works so that the bank and the borrower are covered.
They can charge more. People would pay it. They would pay any amount. But be open with it and cover everyone so that everybody's covered and no one has to suffer at the end of the day if something does go wrong.
The Tollens wish they could turn back time and ask more questions of their bank and its insurer, but for now they're left to worry about the future and how they'll ever pay back their debt to QBE.
We got another 3.5 years of paying it, but it's in that 3.5 years of, you know, the stress and what it's doing to us. We're losing everything, aren't we? If we didn't have family, I don't know what we would do.